Are we live?
You are live.
Oh, how are we doing, buddy?
You're not dead, mate. Give me about 2 minutes.
No
I'll
problem.
be here in 2 minutes. I mean,
No
I'm here
worries, mate.
now, but I need 2 minutes to be actually here. If
No
that makes
worries.
sense.
No worries. Okay, so let's see. We got silver, and it's not a silver, sorry, copper is finally on its way. Now, earlier on, I was talking about coming out of copper and getting, and explaining. I don't know. In fact, can I just check if anybody's in copper before we go on here? Anybody in the copper trade? Nobody in this room, I don't think, is in the copper trade. Just double checking. Okay, I'm just gonna I'll ask this question again. But we got copper. Copper is now on its way and it's running. I'm going to look to add to this position as we go. So I will see whether that's going to be available to us. But copper looks like it's on its way. Now let's just have a look right around the grounds now and just check what's happening with the market on the whole. And it looks like the FTSE 100 is weakening. The S&P 500 not under too much stress right now. Strangely, copper does end up being a bit of an indicator for some of these markets. So I'm surprised to see the S&P doing what it's doing. Let me just double check what we've got with sorry, I've got to check. Oh, brilliant stuff, Sino. No worries. Okay, yes. So the Kiwi yen. Oh, we'll look at it right now. Where is it? Actually, just before I look at it, I just want to see what's happening to the NASDAQ. Where is the NASDAQ? There it is. Showing some signs of weakness, but nothing major there. I wonder whether we might be getting to a bit of a high with the NASDAQ. Okay, no problem. I'm more interested in what's going on with copper. Now let's talk about the Kiwi. Was it the Kiwi yen or was it the CAD? It was the Kiwi yen. The Kiwi yen. All right, let's find that. Kiwi yen. There it is. Right, so we were in shorts, weren't we? And I came out of this one. Right, firstly, it becomes a really simple decision for me, because the psychology that I've got, and my stop is, now we use stops in different places. Now I've just been talking in trading psychology about not moving your stop. Well, that's as long as it's not part of your strategy. But my strategy means that I've got a hard stop and I've got a soft stop. My hard stop is an absolute area that if the market was to pop up there, and the reason I put my hard stop in place is, firstly, it gives me some room to think. I'm just going to calibrate my screen. I think that should be 2. I'm just going to calibrate this screen so I can write on it. There we go. So I will use 2 stops. I've got a hard stop and a soft stop. Now, the first thing is that my hard stop is here. This stop loss is here to protect me against that. Just, because we've just been talking about understanding that every single trade has a random outcome. Now, if we agree that every single trade has a random outcome, then that means that anything can happen. And if that was to happen, then I don't want to still be in the market if I don't put my stop there. However, the reason I don't want to put my stop here is because what I'm also saying is that my timing may also be a little bit random. It may not be quite right. So I want to make sure that my timing is on the money. Now, the only way that I can make sure that my timing is on point is to give it some room. So, you know, I wasn't interested in closing the position when it was kind of, you know, I thought it was going to break down. My anticipation was we get into the market. I might have even been that bar there, and it should fall. It's under the pivots. The setup is there, which is right here. You know, it's under the trend line. So I really like it. You know, I really like the way that this is looking at that particular point. However, my soft stop, which isn't the absolute price, but what I want to see is price react around here and see if I have a chance to get out. My stop loss is above this bar here. Now, as soon as that stop loss, as soon as the price action, this bar's fine, this bar's getting a little bit worse, but then I get a couple of bars that still look okay, but it is above the daily pivot. So I'm starting to get concerned here. Then I get this bar. And this bar is the problem for me. This bar has all of a sudden negated my edge, this one here, because this is a buying bar. It's bounced off the weekly pivot and it's bounced off the daily pivot. So what I would always look for whenever I enter a trade, what I say to myself is, if the trade develops, is there anything in the trade that would suggest that I could go long instead of short? And I didn't go long. You could have gone long. I think somebody was talking about going long, but this bar starts to say to me, I actually could I could take a setup long here. So I'm cutting my loss at that particular point, because at that point my edge is gone. I've no longer got the probability in my favor. Probability is now against me, or at very best 50-50. And I don't want to trade 50-50 probabilities. I want to trade something just with a bit more of an edge than that, with something a bit more certain. So that's the reason that I cut my trades. But you can only do that if you trade with a hard stop loss, and a short and a soft stop loss. So the psychology I always employ is by saying, this is my area that I expect the market to at least fall from. I'm not going to put a stop there because the market could even do this. And then I get my thing. So what I'm saying is my timing may not be absolutely right here, might not be bang on, but up here, it's you know, it's not such an issue. You know, if the market's up, if the market comes up to that point, then I'm definitely wrong. But if the suggestion would be, if the market doesn't break down and start showing buy signals, I could be wrong. So I just come out. That's just the way that I trade. I just come out. I'm not interested in losing. If I've got an entry here and a stop loss here, and as I said yesterday, I went in light on this particular trade. So if I've got a 0.5% risk of a loss here, but I cut out here, I've only lost 0.25%. And what I prefer to do, and I can explain this the best with copper in some respects, because with copper, what's happened is I've got a worse price than my original price, because the original price that I entered copper on was, I think it was about there. We took this in the show last night. I think it was about there. I took copper about there. I've ended up entering, but what I said this morning was close copper at break even. Or I said I'm going to be closing copper at break even. And the reason for that is that it looked to me like my edge had failed, because at this particular point, I'm still within my trend line. And I was just trading a rejection. It wasn't a particularly good setup, but I was just trading a bit of a rejection along, where was it? Somewhere around there. Just trading a bit of a rejection at that particular point. But then this started to develop. So as the trade developed, it did that, and then it did that, and then you know, it's starting to look like we could get caught in a bit of a range here. So what I really wanted was for this to happen, because what I thought is that, well, okay, no problem. What I'll do is I'll come out, and then when I get my lower low, I will trade the lower high when it comes back and retests. Now that opportunity wasn't on offer to me, so I had to enter a little bit lower. But I would prefer, but I would have made more money if I'd stayed. I've lost in a way this much profit already on this trade, but I would prefer to wait to let a trade establish itself and give that much profit away and eventually get a hold of a big one than potentially getting stopped out on multiple trades. So the Kiwi yen closed it early, no big deal. Same happened with the CAD Swiss the other day. I closed it early, no big deal. So I've saved myself 0.5% over the course of the 2 trades. With this one, maybe I've lost 0.5%. I don't know. I haven't done the calculation. So over 2 trades, it may not work out, but I can tell you over a group of 20 or 30 trades, it works out really well. So if the market doesn't do what I was expecting it to do within a period of time, and actually not only does it do what I don't expect to do, but it's also started to look like it could possibly go in the opposite direction, my approach is just get out. Exactly, Si. Exactly. I just let the price action decide. Si, are you still in the copper from yesterday? Or did you not take the trade? I don't know if you took the trade. Didn't take it. Fine. Okay. Well, I was just explaining what happened. So I took it here, but this morning when I woke up, I was just saying that I decided to come out at break even because when it came down, I knew it had to come through this level. And as I say, I was hoping that it would do that, and it might still do that. And to be honest, if it does, I'm going to add to it. I'm just going to get in again. But you know, this is where the opportunity ended up being, so I had to take it there. But yeah, exactly that, mate. I let price action decide what's going to happen next because I accept that I have got a good chance of being wrong. So if I've got a good chance of being wrong, then I've got to watch the market and see, does it give me an instantaneous answer? And the question you need to ask yourselves is, when you have a setup, how many bars after your setup, when the trade works out well, how many bars after your setup does it take? Geoff's got 6. Is that true? It takes 6 bars. I can't hear you. You're gonna tell me? I still can't hear you, mate.
There you go.
There you go.
Okay.
There you go.
That control panel thing, it just disappears and they can't find it. Yeah, 6. Absolutely. For me, it's 6. Why? Well, I guess it goes back to many years back when I used to have a ton of time, right? And I'd sit by and this might help you, Sino. I used to sit by the charts from pretty much an hour before London opened to, I don't know, just before I went to bed, maybe 6 hours later. And it appeared to me, or it occurred to me after, I don't know, 2 or 3 years, that, and I would sit there going, 0.1 of a pip. Actually, in those days, it was pips. These days, it's points of pips. 0.1 of a pip up, 0.1 of a pip down, 0.1 of a pip up. And I do this for hours, you know. I go, what the hell? Nothing's happening. Absolutely nothing is happening in front of my eyes. Why am I actually sitting here doing this? It's a waste of my time. It actually wasn't, because I learned a hell of a lot about moving markets and not moving markets, and when I should and shouldn't be in the market, and should I place a trade now and should I not? And that taught me a lot, actually, all of that time spent. So it wasn't really wasted time. The same as when I used to play pinball machines, it wasn't really wasted time. But eventually I learned that, okay, after 3 hours of watching a 30-minute chart, which was actually doing absolutely nothing, hadn't taken me into the trade, or if it had, it hadn't moved like even 3 pips or 4 pips in 3 hours. And I decided that was the time that I needed to say, out of here, because I need to sleep, or I need to eat, or I need to go and play whatever, cricket or golf or. So that's how it began, actually, because I used to only trade on 30-minute charts and only euro US dollar. You can imagine watching one chart for 5 and 6 hours at a time, and not on a 30-minute chart only. It just got so boring. It really got so boring that I had to come up with a formula. And the formula was that I worked out that 6 30-minute candles was enough. I couldn't stand it anymore. And really, when I analyze that and go backwards, I found that that was a really good idea, because if it hadn't done exactly what you just said, Ash, if it hadn't done what I anticipated that it would do as a result of the setup, then guess what? The setup actually wasn't meant to happen, or the result, or the action of the setup that caused or the cause and effect that I was always looking for. If that didn't happen in 3 hours, then chances are it wasn't going to happen. So I considered that there had to be a rule set for that. So it became 6 30-minute candles. And then when I started trading 4-hour charts, daily charts, I found that the same applied. If it ain't going to work in 6 candles, it ain't going to work.
Well, see, and this is the thing. I mean, I would say it is within that range. Maybe, I don't know. Maybe you go as far as 10. I don't know. But the point is that you tend to get an instant, relatively fast reaction. Over 10 candles. If you're, over a day, if you're trading on the hourly bars, over half a day, your trade should be going somewhere. And if it isn't, then it tells you something. It tells you something about the trade. Now, the thing is, what was I going to say? Oh yeah, I was going to say you don't have to mean that you got to stick to your screen signer. You can just look every hour. Look once an hour. If it's an hourly setup, look once an hour, and you'll be okay.
Don't do what I did. Don't watch every tick. You'll just go nuts. Really.
Oh gosh, it gets frustrating. Now I don't know. PL, I will discuss the copper trade in the US session, because it's going to take a little while. So I will go through the whole trade in the US session. We'll take some trades in the US session. We'll update the journal in the US session. And the other thing that I want to do is explain why the re-entry of a trade, does that going to make sense? Yeah, it can do. It can do, yeah. Explain why why re-entering a trade actually can be more lucrative, even if it's come down a little bit. Now, I'll show you that on my my other account. I'm actually in. I've got more size now on this than I had here, and I'll explain that. And Sai, if you're in the room, then we will go back through the money management a little bit, because it will be explained with this trade. So so you can see how you can actually make more money. No worries, mate. No worries. You'll be able to make more money by cutting. Well, this is what I do. I can only really say what I do. What I do is I can risk more money when things change around, which is why I don't mind cutting out trades. And this is the key about going in light. Okay, it's really important. If you go in light enough, then you've got the clarity to make as many decisions as possible. And when things go your way, then you hit it. So, don't know where we're going to go. Sorry, mate. Have you got any trades that you're looking at or anything else?
Oh, hell yeah. Look, there's so much potential coming up that I barely know where to start. But I'll have a look for you and show you around the place and see what we can find.
Yes, absolutely. Sorry, I'm just going to quickly comment on Sino's thing. One last thing here. So after entry, it was either letting the setup's hard stop loss work, or close before stop loss, knowing confidently it won't reverse before the hard stop loss. Well, I haven't got any confidence that it's not going to reverse. I don't know what's going to happen, but my point with it is that that if it does reverse, then I'll just get in again when it looks better. and I will give something up, but I won't give up that much. And I'll show you in a moment. I'll show you. Oh, no, you're not in the US show, but there's a way that you don't give any of your profit up. Actually, you can actually end up in a better position. So that's why I cut trades early, because I don't know what's going to happen. It just if I don't like it anymore, then I'm just like, let's find something else.
Do you want? Actually, I'll show you a live example if you want.
Sorry.
What was that?
Sorry, I was just thinking Frozen. Yeah. You show us.
Oh,
what
yes,
you got there, mate.
You've got a child, of course. Got it. I'll give you a real live example of that. And
Great.
Have we got my screen yet? I think we have.
Yep.
Yeah.
Yep.
Okay.
Got your screen, mate. Yep.
Cool. Well, I'll just share it again. Here's a trade that we entered this morning. And pardon me, members of my group would have entered this. Forget about the setup. It's not important. Well, it is important, but the key to this trade is that we need to have profit quickly. And the reason we need to have profit quickly is because we're trading away from an untested daily pivot, which is something that I just don't do very lightly. But when I see something that is compelling, which is what this setup was, I have to still, in my mind, or in my trading plan, or in my setup, in my trade management, I have to have this in my mind, because there's a very strong probability that price will come back and head towards the daily pivot, if not tested. I know that. We all should know that. It's a thing, right? When you're trading intraday, you have to have that on board. Otherwise, you're going to cost yourself a lot of money down the track. I've got a rule for, pardon me, potential reversals, which I believe this is. And we're talking about CAD yen, right? And I believe this is a potential reversal. And when I see potential reversals, I don't dismiss the daily pivot, but I'm fully aware that if we are reversing, the first move often ignores the daily pivot. So for that reason, I'm happy to enter the trade at small risk. I've got to add that point. But then when we hit resistance, which is what we have done, I'll go a little bit tighter here, which is what we have done. And I'm going back to here, right? This is where I decided that I was going to take early profit on this trade, because we were at DR1 and started heading towards the downside. Now, I didn't do this lightly. I was in front of the charts today because I had a little bit of time up my sleeve. And I watched this bar here on an hourly chart try and try and try and try. This one had already done it. This one had already done it. This one had already done it. It just couldn't get above the 79.44 mark. So it was at that point I decided that instead of letting it go to 79.50, I would take early profit at 79.42. Now, of course, that upsets my my return on this trade, or my potential return on this trade. But it's always a case of, do I want to get rich, or do I not want to go broke? And that's the trade-off. So I've found over the years that what suits me more is don't go broke. I'm not really concerned about getting rich trading. I'm not. It's just not my thing. I do it because it's a nice little steady earner, and I don't have any prospects at my age of making
Yeah, you're for the knackers yard, really.
Correct. So I've got that. I've got that attitude.
I'm almost done. You're like Eeyore.
Who the hell's Eeyore?
Eeyore, he's the guy from Winnie the Pooh. And
no,
his house
no.
blows down, every day, and he's like, "Oh, your house is blown down here." And I was like, "Yeah, it always does."
Yeah, don't matter. Is that right? I must look at him. He sounds like a cool dude.
He is actually. He's very cool. But no, I agree with you, man. It's interesting, isn't it? It's an interesting, regardless of actually where you are, it's it's one of those things that I always think of it in sports analogies. If you think of kind of like the best teams, that they're always built on a sound defense, and
Defense.
then you kind of see defense. Yeah, they're kind of like, then you start to see them express themselves. I don't know if you've seen the Kansas City Chiefs this year and last year, but they are Hollywood. They are just so They're a brilliant team to watch. And they have got the best quarterback, this guy Patrick Mahomes, that just does some extraordinary things. But they win. They're really entertaining, but they win. But the reason that they're so good is that their defense turns up. And I think you're absolutely right. And you don't need a good offense to make money. You need a good defense to make money, and if and to win games, if you like, or win championships. They always say offenses win games, defense wins championships. If you're going to win a championship, if you're going to win this long term as a trader, you've got to have good defensive strategies, and know when to cut your losses. That's the key, isn't it?
Absolutely. And because we had our stop loss well before, actually, what's going on here? Stop loss was down here, I think. I've moved my stop loss. Stop loss was 78.97. That's down here somewhere, right?
Oh, we got profit on this, have we?
Yeah.
Brilliant. All right. Well, that's for the journal.
No, this wasn't taken in the show.
Oh, all right.
This was only for my group.
Okay.
This was only for my group. So we were at risk of losing. And as soon as I'm at risk of losing, when I haven't had my criteria fulfilled, which is TP1 normally, then I have to go defensive straight away. And that's exactly what I did here. So, I mean, we can still win this quite handsomely, no problem, because we're still thinking up here. But the point of the exercise now is we're doing it for free. And that's where we all want to be. This is an interesting question, John. Should I keep my journal doing my trades only, and not those from Geoff, Ash, and PH? I think this will be of more use. What do you think? Yeah, I've got one answer for you, and it's very, very important. Keep yours separate, but also keep those of whomever you're following. If it's myself, if it's Ash, or if it's PH, you've got to know what we're doing, right? Otherwise, how on earth are you going to know what's worth following or what's worth learning? If my style suits you, then you need to know that. If Ash's style suits you, you need to know that. And if PH's style suits you, you need to know that also. So my advice would be keep 4 separate journals. And you don't have to do that in a separate spreadsheet. Just note 4 different columns, if you like. Yeah, got to do it, mate. Otherwise, the worst thing you can do when you're learning different ways to trade or different methods of trading or different strategies, if you like. Strategies, everyone's got a strategy, right? It's not the strategy that's going to make you money at the end of the day. It's learning how to trade that's going to make you money at the end of the day. It doesn't matter whose strategy you start with. It doesn't matter how good it is or how bad it is, as long as you know how good or bad it is. And the only way you can know that is by journaling. But, the strategy that you start with is almost certainly not going to be the strategy or the system or the method of trading that you're going to finish with. And look, as I said, a strategy is a strategy. There are thousands of them, absolutely thousands of them. The point is you've got to know if they win, if they're consistently winning or otherwise. So the only way to do that, yes, is to journal them. So keep the records of who you're trading with or the system that you're following, person you're following, whatever. The interesting part about about following traders is you're never going to see every trade that they take. No matter whether you're taking trade calls, no matter whether you're in every show that they're appearing in, no matter what, you're not going to take every trade that they take. And that becomes interesting because your results versus their results are always going to differ for that reason. Now, the best thing that you can do is work out a win-loss ratio, if you like, on that particular system or strategy or person, and go from there, because it's that will determine who wins or loses at the end of the day. It's a percentage thing. It's very easy to get carried up and carried away with things like, okay, I made 1,000 pips, or I made it 200 pips or 400 pips, or whatever the case may be. It doesn't matter. That person could have risked 4,000 pips to make that 1,000 pip, and therefore that's a net loss at the end of the day. But
sorry to cut you off, mate. Well, we're out of time. We need to move over to the paid subscription show. So we got quite a lot to cover, so we better push off. So let's do that. And say have a great weekend to you guys, and keep trading well, keep those journals, and yes, as Mai is saying, thank you for attending, and we hope you enjoy it. So subscribe and share. Yeah, that's a really good point. It really helps us out if you can subscribe and share to the show as well, if you see the value. But have a fantastic weekend. Geoff and I will be back as always on Monday at 5 to 8.
That's a date. Don't be late. Thank you, Mai, for looking after us.
Absolutely right.
You're welcome. Bye.
Okay. Hey, how you doing, Mai?
Bye, Mai.
I'm good. Geoff, sorry about that earlier.
Oh, it's okay, mate. Look, if it was the end of the world, we'd be blown up by now. Don't worry about it.
Never a true word said. It's quite nice having a producer, isn't it, Geoff?
Oh, gorgeous. Absolutely.
It's amazing. Okay, so are we off YouTube, Mai?
I'm